Welcome to this explainer. Okay, so if you've been tracking international tax policy, you already know the global minimum tax is no longer just some theoretical concept. It's happening. It's literally being built right now. Today, we're diving straight into the OECD's highly technical implementation toolkit, basically mapping out the master blueprint. We're going to see exactly how jurisdictions are constructing a truly comprehensive global minimum tax framework right from the ground up. Implementing a tax of this magnitude, it's really not just about passing a single law. It's more like stacking the digital blocks of a massive global system, making sure absolutely no stone is left unturned. It's this incredibly coordinated effort to make certain that large multinational enterprises pay a minimum level of tax everywhere they operate. To see how they're doing this, here is our agenda. We're looking at 1. Revenue assessment, 2. Legal foundation, 3. IT framework, 4. Compliance and penalties, and finally, 5. Global exchange. Let's jump right into part 1, revenue assessment, surveying the land. It's actually fascinating to see the wildly different starting lines for tax administrations worldwide. Looking at the data, you see these massive real-world gaps. Now, in an ideal world, like what we see here in Scenario 1, administrations have robust financial statements, tax returns, and full country-by-country reporting data. But fast forward to Scenario 5, and wow, the reality is stark. They're missing crucial internal data and end up relying heavily on commercial estimates just to figure out their potential revenue base. Talk about a huge challenge right out of the gate. Moving right along to Section 2, legal foundation, pouring the concrete. So it turns out, countries don't just copy and paste the OECD rules. That'd be too easy, right? Instead, they actually choose from a menu of 3 distinct legislative techniques. First up is cross-reference, which points directly to the OECD rules. Second is repetition, where they essentially copy the rules word for word into domestic law, a super popular choice for translation. And third is a complete rewrite, where they entirely reorganize the rules to actually fit their own domestic legal style. Now, if a country goes with that cross-reference technique, they're hit with another big choice. They can take a static approach, which means any future tweaks by the OECD require their domestic legislation to be formally updated. As you can imagine, that's a pretty slow process. Or they can opt for an ambulatory approach. With this one, future administrative changes from the OECD are automatically absorbed into domestic law. This naturally takes a huge load off domestic legislative resources while keeping the rules totally up to date. But here's the catch. How on earth do you interpret all this dense new law? Well, Poland took an incredibly proactive and, honestly, pretty intense approach. They went ahead and set up a specialized Globe Council. Just imagine needing an elite advisory body of 11 independent experts from science, audit, and tax just to advise on individual rulings. I mean, that really puts into perspective the sheer complexity of these new rules. Which brings us to our third part, IT framework, installing the plumbing. To make sure this massive flow of data actually works seamlessly, the OECD toolkit lays out some rapid-fire best practices. One thing I found super interesting is that they mandate highly standardized XML formats for local returns. The whole strategy here is to limit human intervention and massively boost automated data matching. The clear takeaway for tax administrations, you probably should have started building your IT yesterday. All right, moving to Section 4, compliance and penalties, the inspection. This naturally brings us to a major operational question. Think about it. You're tracking hundreds of massive multinational entities. How do you actually enforce these incredibly dense rules without drowning in a sea of paperwork? And seriously, what happens when a multinational gets it wrong? Well, the answer is that non-compliance carries a massive sting. Take the Netherlands, for instance. They can slam you with penalties of up to 1.03 million euros for severe filing failures. That is over €1 million. While other countries might use daily rate fines or turnover-based caps, the message everywhere is crystal clear. Tax administrations are taking this extremely seriously, and the financial risks are no joke. However, the system isn't entirely unforgiving, at least not yet. During this initial transition period running through 2026, jurisdictions are offering penalty relief. But there's a catch. A multinational has to prove they took reasonable measures in good faith to comply. Basically, you can't just ignore the laws. But if you're genuinely trying to adapt and you make an honest mistake, administrations are advised to be a bit more lenient while everyone gets the hang of things. Finally, we arrive at Section 5, global exchange, connecting to the grid. Connecting to this grid is achieved through the GIR-MCA, the Multilateral Competent Authority Agreement. Guys, this is a total game changer. Instead of forcing multinational companies to file full local tax returns in every single country they operate in, this agreement lets an ultimate parent entity file centrally in just one jurisdiction. Then, using that secure, harmonized XML format we talked about earlier, the data is automatically and securely beamed out to all the partner tax administrations around the world. It is quite literally the ultimate digital handshake. Now, you might be wondering, what about corporate confidentiality? Tax administrations don't just get a free pass to see everything everywhere. There is a very strict dissemination approach in place. A local jurisdiction only receives the exact specific slice of data that it needs to verify the top-up tax they're legally entitled to collect. It's a pretty brilliant way to ensure global privacy and data security are maintained across this entire network. As we wrap up this explainer, I want to leave you with this thought. We are witnessing the construction of a truly global, legally binding, digitally interconnected tax infrastructure. It's a massive, comprehensive effort. Now that this master blueprint is moving from paper to active enforcement worldwide, how will this unprecedented level of digital tax cooperation fundamentally alter global business strategy? It's a fascinating evolution and for sure one we will be watching closely. Thanks for joining me today and keep exploring.